Welcome back to the channel. We've got another what price to buy, where in this particular video, we'll be looking at Palantir Technologies, ticker symbol PLTR. So we can see here year to date, Palantir is up 91.68%, which is absolutely insane. So have we missed the boat? Should we have got in earlier? What price should we be buying at, and what returns can we expect over the next 5 years? So we're going to look at all of that in this video, and we'll show you how to do that in the next 2 minutes. All I ask for in return is that you smash that like button and don't forget to subscribe. And if you want to know what video you want me to do next on any profitable company, comment down below and I will do that one for you. So to do this, we're going to be using our OGT intrinsic value indicator, where again, the pinned comment down below will go through all the details about how this indicator works. It's absolutely free. Just search for OGT intrinsic value indicator within the TradingView platform. So the first thing that we need to understand is what is the EPS growth for the next 5 years per year for the ticker symbol in question. So you guys know the way I like to do this is head over to Yahoo Finance, put in the ticker symbol, head over to the analysis section and scroll right down to the bottom. And here what it will show you is based on analyst estimates over the next 5 years per annum, Palantir is set to grow its earnings 85% per year for the next 5 years. So that is firstly crazy. Palantir is actually on a hyper growth spur at the moment, trying to build up its commercial business as well as its, defense contracts and government business that it has. Signed a massive deal in the UK with the NHS, which is the National Health Service here in the UK. So what I like to do is use analyst estimates as the highest assumption in this model. So the model has 3 assumptions, low, medium, and high. So what I've done is set it at 85% growth yearly on average, with the medium of 50 and with a low of 30. We'll go into the annual return at the end. The next thing we need to do is to put in is what is the PE ratio, or the price to earnings growth rate over the next 5 years. And again, because Palantir is only recently become a profitable company, it doesn't really, and it's a relatively young company, doesn't have that much price history to kind of really go off here. So again, what I like to do is head over to macro trends, type in PLTR or Palantir, and head over to the price ratio section and then the PE ratio. And you can see here is what the PE ratio is over time for Palantir, with 31 hitting an all-time high for this particular month. And then 20, 30, and then all the way down here into the 8s and the 9s. And, when we kind of had that price boom a few years ago, back all the way up to 26. So looking at other SaaS businesses and various other things, I actually think that a 30 PE ratio is quite low. But again, we want to be conservative. We want the intrinsic value, or the price to buy, to be as low as possible to make sure that we have some margin of safety. So what I've done here is I put 30, 25, 20 as my kind of PE ratio. And again, I don't see Palantir, especially now that it is a profitable company and with the growth spur, I can't really see these 9s and 10s really kind of, keeping there, to be honest, on a monthly basis. So again, I'm quite comfortable with this. And then I think 30 is probably going to be the minimum. But again, it's going to be a high assumption. Let's see what it spits out. And then what this model does is it then gives you your earnings growth over the 5 years. It then times it by the PE ratio to then give you the share price over the 5th year. And then it will backwards re-engineer it to your annual return to get you to the current price. Now, again, if I invest in the S&P 500 and just let my money sit there, on average, I'll be making 8 to 10% a year. So in theory, we should be doing a higher percentage here in terms of a 10% return because of the more risk you have in a particular stock. However, as I like to sell options and trade options, I'll be selling puts to go into the stock, and I'll be selling covered calls while I'm in the stock to get additional income, which will eke out 5-6% a year in the low range. So I'm happy to get 10% price appreciation a year alongside my options. That makes it around 15-16% a year, which is why I'm happy at 10. I could go a bit lower at 8, but I like to keep it at 10 across the board, and that's my own personal preference. Again, play around with the numbers and you'll see what you like to do. So now we've input the numbers, we'll unhide it, and this is what it spits out. So you can hide the table as well, but just to show you what the table is showing. So if we take the high assumption, for example, of 85%, the current EPS of Palantir is 17 cents. So 17 cents, what it does, it multiplies it by 85% every single year. And in year 5, it should spit out an EPS, all else being equal, of $1.94. And then it times it by the PE ratio, which we had was 30. Therefore, in year 5, the price of Palantir should be $58.20, which is what you see over here. Then what it does, it then backwards re-engineers that, takes off 10% every single year to then give you the calculation of what the buy price should be in the current year. So if you believe that Palantir is going to grow 85% a year at a PE and have a PE ratio of around 30, and with an annual rate of return of 10% a year, you can see that the current share price of 31.78 is below your highest assumption. So therefore, it's below your intrinsic value, and you should be buying the stock based on those assumptions. Now, if we can look at the medium at 50%, I think it was at 25 or 25 PE and a 10% return. You can see here in year 5, we're at $22.25. Backwards re-engineer that 10% a year gives you a buy price of $15.20. And for the low assumption, $6.69. So you can see here when we were back in, where are we here? Take this off here. When we're back in January of this year, if you believed in that medium assumption of $15, probably was a good time to buy. I had shares, I think I had about 400 or 500 shares at 20, but I bought those shares around this section over here, and I watched the price go all the way down to a low of $6 and whatever it was. So as it went back up to 20, I was happy to dump my shares because there were other opportunities in the market that I wanted to focus on. In hindsight, I should have kept the shares because it reached a 52-week high of, what is that, $33.13, where I would have made a nice chunk of change there. And again, I was owning shares when Palantir was not profitable as well, and I didn't know when that profitability was going to come. So again, hindsight's 2020, but based on these assumptions here, I think, a $15 price is a good price to get into Palantir. And who's to say, will it ever get back to $15? Who knows? So again, my strategy would be, is when Palantir, or if Palantir drops to around $20 a share, I will start aggressively selling puts at the $15 strike price, or scatter them between $15, $14, and $13, or $15 for one contract. If Palantir starts to decline, do one at $14.50 or $14 and keep trading that down. So if I do get clipped at 15, I then will also make some premium at 14.5, 14, or if it continues to decline, dollar cost average my position down. And that's what I would do. So if we have a look here at the technicals, we do have some divergence in play of the price making higher highs and the RSI making lower highs, or pretty much flat, which again could signal a potential reversal, could be back down to here. But whatever that price is, the key point of this type of stuff is to be patient, right? Okay, we kind of missed an opportunity over here, or we missed an opportunity here where we should have been buying. But again, your EPS number would have been different. And again, with those low assumptions, again, would that probably still would have been good on those particular low assumptions there. So again, you can get this indicator. It's absolutely free. I'm not saying that these are the prices that you should be buying at. Again, test out the model, test out your own assumptions, play around with the metrics, you'll get a feel of what is right for you. But again, if you're very bullish on Palantir with those aggressive growth rates and I think a moderate PE, we're still at a good place to potentially buy. But around 15 is kind of my buy price. If Palantir gets there, I'll start selling puts and start making some premium and hopefully get assigned a few hundred shares. So hope you've enjoyed this video, and I should catch you guys in the next one.